And hello, everyone. A very warm welcome to all of you in this session. Personally, I think there can't be more appropriate time than this to discuss the topic which we have today, which is going beyond COVID-19 by getting the most out of bank fintech partnerships. Without wasting too much of time, let me go straight into the topic. And Udeet, I will come to you first. Uh, Generally, most of the time when I talk to banks or especially the fintechs, I realize that they take quite a long time in taking a product or service to market. And I have spent a lot of time in developing in-house applications or platforms, etc. Uh, if I look at you coming from a technology background and your company is operating across all markets, what would be your view when it comes to adoption of technology? Uh, mm, while fast-tracking the go-to-market strategy for banks and fintechs, and how you support these players across different markets. Udit, over to you.
Hey, thanks, Raj. That's actually a great question, because we do see it across the globe and across regions that we operate in. Now, to give you a background, Arttha actually started off as a fintech service provider itself. So we still operate as a fintech service in Nepal. And having done that, we then expanded our reach in the rest of the world to become a platform player that was essentially, working with the banks, working with fintechs or greenfield banks as they start up operations. And as we started doing that, we can see that our experience as a fintech really helps us understand where we can bring in that benefit in terms of adoption of newer technologies, both for banks who want to become, say, more agile in their entire approach to reaching out and adopting new technologies, as well as when it comes to fintechs that are trying to adopt new technology and bring in a larger reach in terms of an unbanked population or an underbanked population. So for us, when it comes to working with both banks and fintechs, we do see that adoption of technology, while it increases, there is a lot of synergy between both of them. And, I keep hearing this conflict between banks and fintechs. And I think someone yesterday also was talking about using the F word. But to be honest, it's a perfect match. There is a lot of synergy between the two. An example that I can relate to in Africa is, say, what M-Shwari or KCB have done with M-Pesa. That's a classic example of how banks and fintechs collaborate and how growth happens for both of them, because you're eventually going into a larger market, one that banks traditionally have not catered to, have not worked with. They're approaching it in a more agile way, using technology as their lever, but at the same time, they're still depending on banks. And I'll leave you with one benchmark that I came across yesterday, which astounded me. If you'll have seen the news yesterday, Ant Financial, Alibaba's financial arm in China, came out with its IPO in Hong Kong. And one of the key data points in that IPO is they have $258 billion in credit, all of which is underwritten by banks. They don't underwrite any credit on their own. Can't get a better example of a bank fintech collaboration, right?
True.
So,
True.
what do you?
Yeah, thanks. I mean, quite insightful. Now, let me quickly, I'll come back to you this again. Let me quickly move to Charity. Charity, I know you have a huge banking experience behind you, and now you are running a fintech. How do you see fintechs and banks coming together and collaborate? Do you think fintech can help building the efficient processing or transactional platform in collaboration with banks and help drive the new normal post-COVID-19?
For
Charity,
sure.
over to you.
For sure, Raj. Thank you so much. And this discussion is very interesting, something that's very close to my heart because I've had past experience, huge experience, past 2 decades in this industry. I've had an opportunity to deploy digital transformation for banks, deployed some core banking systems, delivered digital products to the mass market, been involved in change programs, where banks try to say they build efficiency, business efficiency to sustain their business. And for me, it's very clear. Banks and fintechs need to collaborate if they have to succeed, both of them, the banks and the fintechs. And you see, banks play a very key role in the economy, and I guess they'll continue doing that. They just have to do it differently. And so they need to leverage on the experience, the capabilities of fintechs, you know, their agility, customer centricity, and just that need for innovation. And that's the reason Digital PayGo is building a digital platform. It's a shared platform to support banks. And we're having solutions for agent banking, merchant payment, onboarding, and just other digital solutions so that we help banks transition, say, from fixed technology cost to the variable cost, but also enhance their innovation capabilities. Fintechs naturally are very customer-centric, and so then you help banks build products that are fit for the market. And especially now with COVID-19, that collaboration partnership is now an urgent need for banks. So for me, really, it's a win-win situation. You get the best of both worlds when a bank and a fintech collaborate.
Mm-hmm. Good, fantastic. I mean, it is quite interesting to see that how a banker is now running a fintech company. And in some places we talk about, you know, the conflicting situations between banks and fintechs. Thanks. I'll come back to you. If I just talk about, you know, both the banks and fintechs put together, I think we have many things to deal with. We have compliance to deal with. We have user experience to deal with. We have cost to deal with. And more importantly, we need to remain relevant to customers and economy during a crisis like this. On this note, let me move to Agrippa and seek your views on the fintechs and bank collaboration. How you see the winning proposition between banks and fintechs? Over to you, Agrippa.
Thank you, Raj. My story is not very different from Charity's. I am going to share just some of the slight differences between our markets, so to speak. But starting off with what I am doing within the financial services space, I have pretty much been doing banking my whole life. But I discovered my inclination for digital over the last 23 years or so, where I then decided to follow closely this track and advocate for it over the years. I find myself in a situation where I am helping my bank, FBC Bank, to transition into digital. And in the process, we have seen a clear merit for setting up an internal fintech. Obviously, that comes with huge challenges in terms of changing the DNA, the culture, introduce agility, experimentation, fail fast, fail forward culture within, you know, a traditional and conservative environment as such of a bank. But the beauty really is there is consensus at the highest level that it is the direction to take. And we've been working with a number of fintechs over the years. But most of the work that we've been doing has largely been optimization, which has been incremental in nature, automate here and there, lower the cost of business, digitize here and there, you know, to improve and optimize performance. But come COVID-19, obviously it has been a quantum leap in terms of what digital should now do. We are really under pressure to digitally transform, you know, our bank. And just as well, we had commenced this project at scale before COVID-19. And we are seeing that because of our change in shift and focus and intensity, so to speak, in terms of our collaboration, you know, trust with fintechs, we are able to achieve more we are embracing Agile, in some cases, actually influencing some of the fintechs to do more Agile, you know, something that's ordinarily you would expect the fintech to be doing. And we are making some significant inroads in that regard. Fintechs and banks need each other. And ourselves, because we have been on the track for quite some time in terms of embracing the Agile way of working, operating like a fintech, we find ourselves also creating new IP, as it were, and coming up with a clearer strategy in terms of developing APIs. So in terms of our executions, you actually see that we are able to control some of our IP, manage our APIs, and accelerate, you know, execution or implementation of some of the projects. And as a result, where there's a change in DNA in terms of a bank, there is very much huge scope to develop capabilities that enable the bank to also actually white label these solutions into the wider market, so to speak, and continue to then collaborate and you know, compete with fintechs. But at the end of the day, really the customer is the winner in all this. No fintech does everything. Banks are strong in payments. You also have got a holistic approach. You know where you're coming from, and they've got a fairly decent idea of where you're going. So going into the future, a lot more collaboration is key. Banks and fintechs need each other, and banks need to go through significant change to leverage the capabilities of fintechs. Thanks, Raj.
Wow, thank you. I just simply love when bank is saying the fintech, they need fintech, and the banks are, you know, coming up with their own fintechs now. Very interesting. And I'm sure in Zimbabwe, financial sector, which I generally follow very closely, will have a very positive effect due to some of these forward-looking thoughts and initiatives. On a quick note, Udeet, let me come to you. What advice you think you can give to banks who are trying to have their own fintechs in terms of, you know, because you see banks, they have, you know, old age technology, huge technology. They actually struggle to you know, become nimble. What kind of advice you will give?
No, but actually, I'll take a point that Mr. Agrippa itself made right now, right? For banks, look, the challenge has been to be agile and to be able to adopt modern technology at a pace that the fintechs generally do. How do you get to that stage? So with platforms like ours, what we've seen our customer banks do, and it's exactly what Mr. Agrippa said, it's white label and then collaborate. First of all, take what a software or a technology platform can bring you, take it out of the box, launch it as soon as possible in the market so that you're competing with the fintechs. And from there, then do your incremental growth in terms of adding on functionalities, features, or maybe technology layers, compliance norms that you need to follow. All of that can be the follow-up to it. But first of all, be nimble enough to say that, look, I'm going to lose business to the fintechs. It's important for me to be able to compete. So let me take something that I can launch as soon as possible and get some business going for this. That's my recommendation for banks.
That's a very good point. I mean, that's what I expect every bank to start realizing. Thanks, Udeet. Now, let me move to one of the most busy places in Africa where I have lived and worked for many years, which is Nigeria. Jero, let me come to you now. You had many hats in past, being a full-time banker, and now being the founding CEO of a fintech. Nigeria being one of the biggest markets in Africa, in your opinion, how you will take this opportunity of partnership between banks and fintechs, and which are the areas you think is ripe for the collaboration in changing scenarios as a result of COVID impact? Over to you, Jero.
Thank you, Raj, and thank you, everyone. I remember the words of Jim Collins. He talks about the brilliance of and against the tyranny of all. Agile institutions around the world know that it's better to collaborate than to go alone. Barely if you consider your return on energy and your return on focus, you know. for Nigeria, a country that's well over 200 million people and in need of all kinds of services, whether you're talking about credit, whether you're talking about insurance, whether you're talking about savings, whether you're talking about healthcare, whether you're talking about the agri-value chain, there's so much opportunity for a huge number of people to take advantage of a country with over 99.6 million adults. So it just tells you that there's a huge market. And if you play in those areas that are particularly driven to impact, access to finance, one of the biggest deficit areas we have in Nigeria. So looking at how to provide small loans to both small-time business owners and individuals who have need for short-time credit, or people who want to save. A large portion of Nigeria want to save, but they want convenience. They want it to be easy. They want at the touch of a button to be able to save. Or you want to look at people who are interested in remittances. Nigeria only accounts for over 70% of foreign remittances that comes into Africa, and the need for that remittance is huge. I remember having a conversation with you, Raj, and we said that remittances that come into Nigeria is more than the foreign direct investment that comes into the country. So it tells us that there's huge need for collaborations in these areas from both the fintechs and the banks. Going alone is the difficult way. Going together is a smart way. And I think a lot of banks have come to see that, that fintechs can also focus on the areas of strength. The bank can focus on the areas of strength, and you come together and you see the kind of huge revolution you can create around the world. Kenya has taught us something like that. You see what Equity Bank and Safaricom did together is massive, and we've all learned from that. If individuals were to go on their own, it would take a longer time, it would take more investment. So a huge country like Nigeria has seen the need to do this, and we're seeing a couple of banks partnering with fintechs. For me and for Agile as an institution, the need to respond particularly to areas of need, areas of impact, particularly in this COVID period, is what is key to us. One area, like you all agree, is that has to do with healthcare. Nigeria is massive as it is, has got not more than 5% access to quality healthcare. And we're able to partner with an institution to offer affordable and flexible healthcare services, partner with this institution. There's also the need for the agri-value chain sector. And you need both the banks and you need the fintechs that are able to provide this access to farmers who provide the food to feed the nation. Also in terms of agency, where you have access to financial services. No better time you will need that access than now. I can tell you clearly during the lockdown period, the agents were of the greatest need because the banks were not working, the ATMs were mostly empty, and the agents were flourishing, and also had access to funds at that point in time. So for us in Agile, what we've said is that we're going to look at the opportunities, we're going to be agile and focus on those areas of impact and emerging, providing solutions and partnering with banks and other institutions to provide those products and services that the market is demanding for.
Great. Quite interesting coming from you, Jero. Let me quickly move to Danson. Danson, I know I kept you waited, but let me come to you now. Personally, I always consider Kenya as the innovation and fintech hub of Africa. And in post-COVID environment, I think that digital payment is one area which was most in demand, especially no-touch payments. And if I talk about myself, I have not handed over my debit or credit card to any merchant for making payment in last 4 months. I'm only using the no-touch payments, like payment through the mobile QR code scan. In this regard, what you think banks should learn from fintechs and how you see the collaboration can bring more innovative products to customers, especially in payment space for SMEs? Over to you, Danson.
Thank you. That's a good question. And first, to give a bit of a background on what really drives fintechs, especially in this part of the world. One is a lot of fintechs will be out of a background of having gone through a challenge with a bank. And a lot of times they are trying to go after initially most of the fintechs will be going after some segments of the bank's markets and looking at challenges that are in their communities. And I would give an example of us at JamboPay. Our drive really was 10 years ago was we were looking at what banks were then not able to provide, and us trying to provide that to SMEs. Having said that, I think it boils down to what people would term as design thinking, or coming up with solutions that are driven by what the customer out there needs, as opposed to what maybe banks, regulators, and so forth would assume of what is a need out there. And once you look at it from that perspective, you find the common grounds where areas of collaboration between banks and fintechs. And more so, if I look at COVID situation in relation to SMEs and so forth, the challenges that we are posed now are, of course, we have diminished spending power. Supply chains have got a bit disrupted. We have confined people. That means there is less exposure to brick and mortar and more exposure to 2-3 screens, mobile, TV, maybe laptop on a good day. And then, so coming to points and areas of collaboration between fintechs and banks in relation to serving SMEs, I see regulatory requirements that are levied on banks is a big challenge that, one of the challenges that banks would gain by partnering with fintechs. Fintechs have certain agility. They are less regulated than banks. And so passing a product to a fintech gets you to not bypass, but to get past regulatory barriers fast enough. I also think technology bottlenecks that face banks. Banks have suppliers. A lot of times to add a new feature or adapt something new, you need to do a whole change management, a whole requests, a whole chain of people involved in that. Well, fintechs are quite agile. Ask JamboPay you want something tomorrow, and we have engineers working overnight, and we put tomorrow it's there, it's delivered. So I think there is all the agility in terms of technology when you partner with technology companies. And of course you have costs of service delivery. A fintech leveraging on economies of scale. For example, JamboPay serving over 5,000 merchants or businesses in the regions of Kenya, East Africa. That means we gain out of certain economies of scale as a result of serving all these other, I mean, many SMEs. So I know there is a great deal to gain in cost of delivery, time of getting to market, and then regulatory barriers. You are able to go around them or move faster towards getting a product to the market when you work with a fintech, and of course technology agility.
Well, Danson, I'm sure in changing scenarios, very soon we will see businesses will stop requesting checkbooks from their banks while increasingly adopting to digital payments due to innovation in fintech space. Let me come to Charity now. Charity, I want to just put you on a spot. You have just been into bank and now you are into fintech. What do you think as a barrier of collaboration between fintechs and banks?
Number. Banks, their DNA is sort of very aligned to risk management. And so one barrier is where there's this misconception that fintechs are not so prone, you know, to risk management frameworks. So they don't trust that fintechs have the bank's back. So that's a barrier. But also, like Agrippa was talking about, banks sort of want to look at the market, want to look at products and services from a silo perspective. And so they believe they can do everything. They believe they've got a muscle to try and build technology capacity internally. And so they feel they should monopolize the market. So that also is a barrier. You know, that thinking to think that because it's a bank, they can do everything. They forget that they are not a technology company. The processes, the decision process is so not aligned to technology, to agility, to the way fintechs work. So in my view, those are the two main barriers where the banks do not trust the fintechs, thinking that it's so risky to partner with a fintech.
Thanks. I speak to so many people in different regions, and this is one question which I always ask everyone. I mean, why you are trying to do something of your own, or do you don't trust the fintechs and all? And let me go to Agrippa with the same question. Agrippa, what do you think is the barrier, and how we can? Do you think there is something to do with the regulatory requirements or the compliance things?
Thanks, Raj. Indeed, barriers do exist that have slowed down, the level or quality of collaboration between banks and fintechs. But as Charity mentioned, yes, the paradigms and business models are quite different. The DNA, consequently, is also different. Banks have got the operational risk, or rather the risk view of the world. And with that risk view, they look at things from the inside out. Fintechs do look at things from, the outside in, which really is the foundation of design thinking, customer obsession, which drives fintechs to design those products and services that resonate with the customer. Everything starts with the customer. Whereas if you get into a bank and you are looking at any project, if there are two projects, the one that says this is a compliance project and this is a customer experience project, it's very obvious what is going to be given priority. It's going to be the compliance issue. And yet, at the end of the day, these institutions are there to serve the customer. But I do agree it's a balancing act. Now, coming on to the impact of COVID and how the fourth industrial revolution is evolving and impacting on institutions, particularly banks themselves. Regulation is also changing to align with these changes that we are seeing. And I do believe, Raj, that those institutions that are going to be able, that are designed for change, i.e., cooperate, collaborate as a bank with other fintechs, with other players in the ecosystem to provide solutions to COVID, to any other new challenges that are evolving, are the institutions that are actually going to succeed. Over here in Zimbabwe, we have just had a significant change in terms of our regulation. By the way, Zimbabwe, I maintain, is one of the most cashless economies in Africa. Not entirely by design, but by default. It's either you pay via mobile money or you are using a mobile application or your plastic to make a payment in this market. If you have none of those, your life is really going to be difficult. So what we have seen is that mobile money has driven or accelerated payments. And now we are at a point where pretty much everybody has got either a mobile banking product or a mobile wallet, which they use to make payments. And we've had a major regulatory change, what we call SI 80 of 2020, which has mandated interoperability. So all wallets, all mobile bank accounts are now going to have to be interoperable by 30 September. I know this is a huge conversation across Africa. You've got players that have been holding on to ecosystems because they are a monopoly in some of these markets. They don't want this interoperability to happen. But now it's mandatory for you to operate in this market, and we are seeing a bigger role for fintechs to play, and those institutions, particularly banks, that are in a position to collaborate better, change their DNA, and also the strategic focus in terms of the highest executive levels of these institutions are going to succeed in terms of these partnerships. Thanks, Raj.
Thanks, Agrippa. I'm so happy to see a banker is keeping the, flying the flag high for fintechs. I have, Danson, I'm coming to you now. You heard about, this, the importance of compliance which banks are giving. And you are running a payment system for so many years now. And of course, you are balancing between compliance as well as customer experience. What kind of advice you would give to banks? How to do a balance between you comply with the regulatory requirements as well as you also provide the best of the customer experience? Danson.
Thank you, Raj, for that question. And first to begin, really, it's I think a lot of banks create their own fintech outfits within the banks. And a lot of times it's driven by a need to beat the compliance hurdle that faces most banks. You go to a regulator, you have to plan for 3-6 months to get an approval for a product. Sometimes similar duration for even a change of tariff. So I think banks can beat this by not just that approach, because really there is internal compliance that are inbuilt within banks, and there is external compliance. A bank product goes through internal compliance mechanism. Well, there is also the external, which is the regulators. And so I think there is a space for banks to, a need actually. It's actually a need that they get to partner with the fintechs, because a lot of fintechs, a couple of fintechs like ourselves, we are still regulated by the same regulator, but we fall under a different category. JamboPay, for example, is a payment service provider. Falls under regulatory environment of the central banks, and at the same time we still maintain our agility as a fintech, and so I see that is a good ground, a common meeting point for banks to get to roll out products that are. But then a lot of financial products are financial products, and they fall within regulatory environment. So if a bank changes the mindset to looking at needs out there. And I'll give example of a product that we have recently launched called the JamboPay Market. This is basically a multi-vendor e-commerce platform that is targeted at businesses, farmers, manufacturers out there. As a fintech, we are looking at I'm looking at my grandmother and my auntie and my neighbor in the village. How do I get them to sell their products to the market? And that means not just the technology, it means aspects of logistics, but at the back of it all, there is a whole payment system infrastructure that should be supported by a bank. And so this particular product here, we also embedded a couple of banks. And so it's essentially driven by a fintech, but the funds are sitting within a regulatory environment and within the banking environment. We are able to white label, for example, that platform to banks, any bank that would like to have but really, if you look at that aspect of white labeling, because it's a big topic that a lot of, especially people in digital payments, financial services want to discuss. A lot of times, if you white label, for example, this product and call it Bank 123, they would have to go through that product. They have to go through the regulator out there to get approvals, and that boxes them back into the same barriers and restrictions of regulatory space. And so I think banks got to allow fintechs be, but just get to understand their business model, allow the fintechs to keep their business models while staying true to their business models as banks, and find common grounds of collaborations, so that you allow these fintechs to be agile, to do the somersault, back, front, sideways, and whatever, run fast, 100 kilometers per hour, 200 kilometers per hour. Whenever they need to jog, they jog. That's what fintechs like to do. A lot of times driven by changing dynamics in the market environment. As I sign off on that point, I would like to probably revisit what COVID has done, and especially in relation the role of regulator. I have observed in East Africa and most of Kenya is sort of changing from being it's shifted from being more facilitative. We are looking at survival here. COVID-19 situation has posed a scenario where we are looking at survival of a people, survival of communities and society and countries, economies, and so forth. You're basically looking at a basic family unit, a human being somewhere out there, and you want them to survive by being alive, while at the same time economically being found. So regulator shifted role looks like they are facilitating, they are more of facilitative and less of restrictive, or the barriers to entry that would essentially occasion a typical regulatory mindset is shifted to, can we, what role, what bottleneck is this fintech or this? So banks ought to rate their engagement with the regulators to try exploit that changing role and deepen that changing role with the regulators, so that they can take advantage of the business environment that we have. I would also like to point out something about the business model changing. You see, users now want basics. Basics means basic services, food, shelter, health, and one interesting one, access to information, that data. It's now basic for someone who is confined at home. And you cannot find this in any bank. These things, you not find any food anywhere in any bank. They're nowhere there. I have checked around, they're not. There's no bank that has shelter that you go and get hosted there when you are not able to get sheltered in your house because you're not getting the income. You don't have any bank providing data or health services. And so there is need for banks to come around and look for where to find this. And this can only be found in those technology, agile technology companies and fintechs more so, not just fintechs. There are a lot of other companies. Very few fintechs are in health, but there is a lot of health tech that is out there that could provide collaboration with banks to provide, for example, insurance services, the medical insurance covers and stuff like that, that would essentially be financial services. So that's my view on especially the situation we have and the regulation.
Thank you, Danson. Very, very insightful. And if I can say, in last few minutes, I think we have already built up a roadmap of collaboration between banks and fintechs. If I just talk about fintechs, I think just by keeping an eye on future opportunities, fintech companies may be forced to re-examine their mission and business models after COVID-19, as well as the banks. A key question is how to leverage both existing and newly developed assets to seize the new opportunities, because the opportunities is coming is very new and is huge. It could be an opportune time to think big and act boldly. Jero, I have a question for you, and I remember you mentioning about access of finance to people. And my experience, I mean, no matter which region I travel to, when it comes to fintech, I mostly see fintechs operating in payments or in processing areas, in transaction processing areas, and very few in lending areas. What do you think is the reason why it is not so much of concentration by the entrepreneurs in fintech? And do you feel that there is something to do with regulatory requirements in this area? Jero.
Okay. For the fintechs, I'm going to speak a lot particularly to Nigeria. The lending area comes with some other requirements. It also means that you either have to be collaborating with a bank or a financial institution that has access to the funds to lend the people in the first place, or you've got to get some form of license and be able to do that on your own. And a lot of the fintechs don't want to carry that kind of responsibility. So they would rather either partner or provide some access to an institution that has access to the funds and provide this service. What is even more interesting is the fact that a lot of both fintechs and even banks in Nigeria do not particularly pay a lot of attention to the insurance sector, which is going increasingly popular around the world. And particularly if you look at this period of COVID-19, the health insurance is a major area that healthcare, a lot of people napping, around the world with the impact of COVID-19. And so beyond just the traditional lending, saving, and all of that, fintechs can do a whole lot more. Regulation is like, and I'm going to speak a bit on regulation. For the banks, was one of the things that also made it a bit difficult for the banks to run at the speed they would want to is regulation, because particularly in Nigeria, everything needs to be crossed and dotted before they can go ahead. And we don't see that same kind of scrutiny, if you want to put it that way, with the fintechs. Fintechs are more agile and nimble. They can move a lot faster and get a response to certain needs and create products and services to meet those. But banks cannot particularly do that. So back to the main question that you spoke to, the fintechs will likely not do more in terms of lending, basically because of access to finance, and also because of regulation required for you to be able to do that in some form of regulation, as license to do that.
Thank you so much. I have a question for Udeet, and Udeet, what pitfalls should a bank avoid while choosing a digital fintech platform? Shouldn't the technology be enabling businesses rather than controlling or directing businesses? Any insight on the key learnings? I mean, whatever you have seen across the different markets.
Sure. So it's an interesting question, right? When a bank's trying to procure a platform, or for that matter, even build a platform to compete with a fintech, they look at everything that the fintech has, and they say we want all of that, but in the box of the regulatory compliances and processes that we have. And that's where the biggest challenge for them comes up. So for me, when you're choosing a platform, I think the biggest learning that we've seen across customers has been get your priorities right as a bank as to what you want to achieve with that platform, and then just check whether that is what is possible with the bare minimum compliances or guidelines that you need to meet. The minute you start trying to fit a square into a circular hole, it's not going to work. Fintechs have been built for a certain purpose. A fintech platform has been built for a certain purpose, and that is to go to market fast, to try and expand reach and onboard more customers and provide them access to more products. Now, if you're trying to get that and then put all the process levers on it, it won't work. It's as simple as that. So in my opinion, that's get your priorities right is the biggest learning for every bank that we work with. And that's the first thing that, we kind of tell them also when we start working with them.
Mm-hmm. Correct.
Yeah.
Correct. I think, if I am talk from the fintech perspective, I think an important outcome of COVID-19 for fintechs may well be the continued acceleration of partnerships with financial institutions, and which can offer the benefits of capital, distribution access, and compliance infrastructure, but often lack hugely sought after digital solutions. While saying financial institutions, I have a question, and I want to come to Mr. Agrippa. While we are talking about this partnership with financial institutions, how about getting a partnership for fintechs with non-financial institutions, with other fintechs? And when I say non-financial institutions, you can say MNOs and other players. What do you think? How the partnership in that area will play?
Sorry, Raj, I didn't get the last bit of your statement.
Okay. What I was trying to bring is, when we are talking about the partnership with financial institutions for fintechs can also partner with other fintechs as well as non-financial institutions, including MNOs. How you see that space? Because MNOs are doing, a lot of financial activities these days, including lending. So how you see this opportunity?
Yeah, thanks, Raj. That's an interesting question and a very relevant one too, particularly for emerging financial services markets like Africa, where I think the issues are in two categories. Where you say, in the first instance, you see regulation playing a very, very significant part in terms of influencing how, fintechs and other fintechs, engage and partner, and how fintechs and traditional financial institutions, interact and collaborate. Where the regulatory environment is liberal, I think collaboration should really be across all types of players. The traditional ones, the shadow financial institutions, as well as innovators and fintechs on the other end, which is great. That way, the overall outcome will be a great one. Then you've got a scenario where the regulatory environment is very tight. Something that has influenced the development of financial services, particularly those that are driven by fintechs. And I've seen in some markets, regulators, applying this test and learn, or they allow, players, whether it's a bank, it's a fintech, or a collaborative effort between a fintech and a bank, allowing them to go into the market, and then they regulate on the back of, of the product or the service actually getting into the market. Such markets have tended to achieve a whole lot more in terms of financial inclusion, developing products that are really, really relevant for the needs of that particular market. Out here in Zimbabwe, I can give you an example where I think in the first instance, 2011, the central bank was very liberal about allowing, the MNOs to play. And that is one of the big reasons, apart from the fact that we're going through a hyperinflationary era, one of the big reasons why we were able to include a whole lot more people on the payments, electronic payments platform. And now it has got to a situation where there's pretty much saturation. There's a level of maturity, and we have just been going through a sandbox guidelines review as market players, which is going to guide the interaction of banks and fintechs. Prior to that, fintechs, particularly in payments, had what we call third-party payment service provider guidelines. They had to be sponsored to come up with their own independent innovations or in partnership with banks. But now we are seeing a sandbox environment which will allow any innovator, any fintech to bring in their solution and test it and take it to market. So that's a very enabling environment, so to speak, which should help this particular market. So ultimately, it's those two scenarios that I see. But DNA is the most fundamentally important to drive these collaborations. Thank you.
Yeah. Thank you so much. And then it's all great to hear from the seasoned people from ground. I'm told we are running out of time. So while inviting Fahad to come on, I would like to thank everybody on the panel for their insights and their comments, and I'm sure the audience will be benefited immensely with this. Thank you, everybody. Thank you so much.